I'm Neneh Biffinger, the principal of Green Means Go. I partner with master plan communities to help them elevate the visibility of their communities and really strengthen their relations with builders and brokers. We all know that it is tough right now for buyers. And if you've been in the industry longer than COVID, you know it's been tough in the past and they've struggled in the past as well. But there are also a lot of fantastic and great and exciting things happening in our industry. So high five for joining us today to hear about them. Jess and I have a lot of good nuggets to share with you. I was so excited when this rock star and famous person, agreed to partner with me on this webinar. We've got a lot we're going to be sharing with you. So make sure that you get your note takers and your screensavers ready so that you can get a lot of valuable information and capture it. First, before we dive into a lot of the nuggets, I'm super excited to tell you about Baseline, which is it is the featured community. I'm curious, just pop it up. How many of y'all have actually heard of Baseline, the community in Broomfield? Take a second, put in your votes. Just let me know how it's coming through, if we're getting percentage of people coming in.
We are, yeah. So we have six out of 17 that have heard of Baseline.
Fantastic. Okay, thank you. I am also curious, before I dive in and talk all the fabulous things about Baseline, if you'll put it in the chat, because I just want to see, what are your buyers saying that they're needing and they're wanting in a community neighborhood? Is it walkability, walkable to schools, close to the resources, sustainable community, affordability, close to their job? What are y'all hearing from buyers? Urban garden. Okay, thank you. Anyone else? Pop in there. Let me know. All right. Well, a lot of things we're hearing is walkability, the sustainability. They want to be close to schools if they do have the kids. They want, of course, affordability, and they want something unique. They want a community close to work. Got it. A yard. Okay. Close to stores, entertainment. Fantastic. Thank you for sharing. Baseline is the unburbs. It is where urban energy meets open space, and in a more connected, more sustainable, more interesting way to live. And that is what Baseline brings. It's the neighborhood of multiple builders offering a variety of modern single family and townhomes designed to be low maintenance, energy efficient, and it's really inspired by Colorado's active lifestyle. Can you go to the next slide, please? Now, I know you're going to ask, of course, where is Baseline? Oh, thank you. It is in Broomfield, and it really completes the Denver-Boulder triangle. It's at the intersection of Baseline Road, I-25, E-470, just northwest of that Top Golf, if you know where that is. It's conveniently located with easy access to the highway and really only 25 minutes to get to downtown Denver. And if you are a commuter to the airport or you just love to travel, it is only 25 to 30 minutes to get to the airport. And that is why a lot of buyers actually buy and choose Baseline, because it is so easy to get there. And for the people who really love Boulder and want to live in Boulder, but they can't afford it, Baseline is a fantastic option, only being 20 minutes away from there. Next slide. Baseline is 1,100 acres of walkable master plan community. There's 2 villages, and it originally started with 7 different builders. 4 sold out, 3 are still remaining, which I will tell you about in a minute, and even more are coming. Ultimately, Baseline will have over 9,200 residential units, and then they're also going to have commercial. The homeowners get to enjoy 300 plus days of our Colorado sunshine and all of the fantastic outdoor opportunities, including 172 acres of parks. 4 parks are already there and more coming. And then there are miles of trails to really enjoy the outdoors. You'll see in the next slide, Park Lane is the living street that really links the 3 key spaces in Baseline's community. There's the big green, little green, and the quad. By uniting these areas, Park Lane, go back, Elise, strengthens the neighborhood's fabric and ensures the residents really can easily move between the gathering spaces, whether by foot, by bike, or by car. The big green will be the hub of the activity. They'll have grassy areas with room to play and events like concerts and yoga, all kinds of things coming for that. It will also have a loop trail for strolling, benches to take a rest, and play structures there. Next is the Parklands, which is a 62-acre central linear green space that's envisioned to be the centerpiece of Baseline's green infrastructure, with plans for, again, many parks woven together along Pebble Creek. There's going to be 700 feet of promenade with play structures, plazas, pollinator plantings. And planned as Baseline's social hub is a blend of coffee house, tap room, meeting space, small concert venue, beer garden, and dog park. I really feel like it's a wrap that I have to say with this. It's so many things happening over there. It's going to be the social heart of the community and really the starting point for the buyers, potential buyers, when they're searching for their dream home in Baseline. And then there's the Central Business District that's defining the centerpiece of the community. It's planned to bring sought after high-end retail, dining, boutiques, fitness options, and other urban amenities in the community. They're envisioning things like True Food Kitchen, Flower Child, Root Down, Berries, Soul Cycle, Stretch Lab, a lot of fabulous things that'll be coming. The plaza will host a variety of events like movie nights, yoga sessions, and it really undoubtedly will be the spot that residents and the larger community gather for, well, they can partner too, but they'll gather for the events. They'll hang out with their friends, grab a coffee, bike to go eat. And then there's a public square that'll be a great venue area for celebrations, large and small. Next one, please. Now, this is exciting. Baseline already has a school. The residents can currently walk to class at the K through 12 charter school called Prospect Ridge Academy. And also, the community is very excited about the planned future STEM school that will be coming anticipated 2032. Next one, the lifestyle, just everything that happens in the activities is so fantastic there. It's managed by the wonderful community association Cohere. They pull together a lot of community and public events, resident events. They have resident clubs, kids clubs, so many things happening. Some staple events that you may have seen or we invite you to be a part of coming up are going to be Take the Trails, Honeybee Day, and Be Merry in Baseline. Now, while last but not least, of course, we are proud of the variety of housing options and types of what we really bring that helps a diverse range of buyers and brings them to the community. We launched our newest village in 2023. It's called Parkside West, and it has Berkeley Homes, Boulder Creek Neighborhoods, and Dreamfinders Homes. And again, even more are going to be coming. There's the variety of detached single family, paired homes, townhomes, apartment homes, built to rent townhomes. So let me tell you a little bit more about these fantastic builder partners. First, we have Berkeley. They are a local builder. They have from the price, mid upper 600s is where they're starting. They are 3 levels. You have an option to be able to get a rooftop if you would like. They have fantastic incentives for your buyers right now, which Jess is really going to tell you about the value around that. 20 to 30 in incentives. And right now they are paying a broker commission of 3% on the base price, 2.8 on the total price. And if you follow them, you'll see occasionally that they are offering like quick, fun things for brokers as well as buyers as extra incentives. The next is going to be Dreamfinders. They have townhomes right now, 3-story townhomes, 3 to 4 bedrooms, starting in the low 500s. They're just bringing these into the new side. They're providing a 3% realtor co-op. They also have different incentives. Quick move-ins are available. They also have some rooftops on the ends, lots of light in their fantastic townhomes. And then finally, there is Boulder Creek Neighborhoods. They are really this beautiful luxury home. One of the homes that they're offering is the single family 3-story, starting in the mid 900s up to $1 million. And then coming soon, everybody is super excited. They are going to bring these wee cottages. Oh, go back, Elise. Wee cottages are going to be coming starting in the mid 500s. And those will be 2 stories, 2 and 3 stories. Again, tons of incentives. They've got the $50,000 in flex cash and other credits that are happening with them right now. And then David Weekly, they're going to be coming back in late 2025. They were so fantastic. They sold out, but they will be coming back. One thing I forgot to mention, Berkeley has done so well at selling that they actually only have less than 8 units and they'll be done before summer. So bring your buyers before then. Lastly, next is the QR code that get your phones out and you can link up with Baseline. This will take you to the page, the broker page, to tell you about what they offer with brokers. We really invite you to come out and visit the community because seeing is believing. Meet the builders. We encourage you to host open houses on the inventory homes. You can host buyer workshops in the models instead of ugly libraries. And for example, you can use the insights that we share with you today or even partner with industry partners like Jess or title companies and host some workshops in the models. If you have questions or would like to have a presentation at your brokerage, you can contact the marketing manager, Navana. I will put her information in the chat before you go, or you can just connect here via that Baseline link and she will get back to you. Did any questions come in, Elise?
Yes. What is the most cost-efficient home that Baseline offers?
Cost efficient home, meaning like energy efficient? I'm not sure what can they clarify that?
Probably the lowest cost home is my guess, Nina.
Lowest cost, okay, lowest cost would be the Dream Finders townhomes right now that are in that low 500s.
Cool.
Thank you. Any other questions?
No?
Okay, fantastic. We can move on over to my slides. Now I'm going to give y'all a fair warning as Lise pulls this up. I'm super excited about this topic because new is it's just better than resale. And so I'm going to share those fun facts with you, but fair warning, I will be saying the word new home quite a bit. So you could take it as your exercise regimen. Every time you hear me say new home, do a jumping jack or a squat and you'll be good to go for the rest of the day. So really, I'm going to tell you about selling the dream, not the hassle, and why new homes, here you go, do your first squat, are the smarter move for your buyers. This is what's really important, you guys. You need to collaborate with each other, ask each other questions, share your resources, continue to learn. It's fantastic that you're here. Jess has other classes. There are so many courses out there. You can follow builders, read articles, join associations, new home construction related associations like the Builder Realty Council, Home Builders Association. That's really how we are going to improve our industry and you increase your value. So I just highly encourage you to do that and collaborate and learn. Okay, next, Elise. Here's the thing. You're not alone in your affinity for new home construction. First fact, in a recent survey, 69%, at least if you can hit it, 69% of buyers prefer buying new over navigating used or renovating. And that percentage just continues to grow every year. Another recent survey just said that 91% of new home buyers said that they would purchase new home construction again. It's fantastic. You can see that in these resilient new home sale numbers. While over the last 2 years, existing home sales have declined, and it's actually been the lowest since 1995. New home sales over the last 2 years finished with year-over-year growth and is up compared to 2019. That growing percentage continues with new home sales. Historically, it's really only about 10 to 12%. And in 2024, it was over 30% were new home sales over resale, which is actually 12.4% higher than 2023. It's pretty astounding. And out of the approximate 400 new homes in master plan communities in Colorado, there are over 60 builders. And in the over 200 communities in the Denver metro area, they have more than 40 builders. So there are a ton of options for your buyers. Now, I know that y'all all want to be superstars for your clients. So I really pulled together a lot of resources and talked to experts to gather this list of 10 plus a bonus reasons to include new homes so that you can be that superstar for your clients. I'm also going to give you some value-added suggestions so that you really can become that market expert. I encourage you to showcase your superstarness by marketing yourself. A majority of buyers, this is true, a majority of buyers use online resources first. So share your knowledge there. Utilize the nuggets you get from today. Shoot a video in a community or in a model home tour. Interview a builder. Post it online in a blog, video platform, social media platform. Host a buyer workshop, like I mentioned. And really, you want to share the education with the buyers. Now we'll get to the reasons. This first one is probably the most popular answer. There's no toenails in the carpet and no tissues on the toilet seats. Really, everything is brand new. It's not someone else's home and it's never been used or lived in. 40% of buyers said that this is the top motivation for buying new construction. The benefit to you as well is that you don't have to worry about hiring a cleaning crew for the move-in because the builder is going to do it for you. Now, when we are in the market that we're in and there is a limited inventory, it's low, it is great to have additional options outside of resale. Most builders provide multiple locations throughout the metro area, which enables you to help more clients in more places. I recommend that you really do some research. Get to know what's available, whether it's driving around, using the online resources, go visit the new home developments like Baseline, meet the builders, talk to the sales associates, find out what they're offering, get to know the products, their fees, incentives, everything before you bring your buyer in. Host an open house in inventory homes to bring traffic and get to know that builder, develop that partnership with them. And then attend builder-sponsored events, whether it's their model grand openings, lunch and learns, golf tournaments. There's just a lot of ways to get involved and get to know the inventory and what's out there. Now, the top new amenity is community. And this is the reason that many people buy new construction. They might come for the product, but they ultimately buy because of the community. And it's really that opportunity for them to recruit friends and family and build their own neighborhood. I recommend for you to follow, share, and attend community events in the areas where your builders where your buyers are searching, because then you'll get to know it better and you'll stay connected with your buyers and bring some value that way. Now, this is great. Freedom of choice, right? New homes are semi-custom and resale was really custom for someone else. 32 to 36 buyers said that customization, floor plan choice, and trending features are why they chose to buy new construction. So whether it is the floor plan that is built for today's lifestyles, lot location, or design features and trending finishes, building new home construction really is what gives your buyers the options for what they want. Now, here is another big tip on this one. You got to stay out of your own way. You're going to have knowledge, and I know you want to bring value, but when you're doing those tours, ask questions, but don't do it where you're talking your buyer out of a sale. It happens very often, and I know it's not intended all the time, but just beware. Let that sales associate be the expert on their product and help your buyer see that that might be the home that could be theirs. I would also say work with the builders to get estimates up front. Then you can guide your buyers on what really their funds are, what funds they have that are available for the upgrades, and help them not blow their budget. Give them insights on what is trending and what is important and not important to choose as an upgrade by the builder, or do it later themselves. For example, carpet, no, you don't have the builder upgrade it, you do it later. If it's a cabinet, yes, you most likely would consider to have the builder do it. Also, give your buyer a snapshot of how their upgrades are comparing to the comps or other homes that are on the market, so that and also consider how long they're going to be in that home, because you don't want them to be the most expensive house compared just because they did too many upgrades. Now, it's really there's no debate. New homes are cleaner, safer, healthier, and more energy efficient, from how it's built to the appliances. So homeowners can really breathe easy and save money. As a matter of fact, the Department of Energy estimates that the savings are up to 25% on your total energy costs when you buy new construction. They're up to current code. There's inspections along the way required by the municipalities. So every phase is going to have an inspection, which is better than a resale homeowner DIYing it, not pulling permits and renovating. There's better HVAC, go back at least better. There's better HVAC, there's better HERS or rating scales. If you're not really familiar with what the rating scales are, I recommend taking a class. There is a new construction specialist class with BRC, or a new home construction and builder representative course through the Center of the Realtor Development. And I also want to say that really when you move in, there's less retrofitting, repairs, or DIY. So there's low to no deferred maintenance, and there's no immediate remodel costs. So it really reduces that out-of-pocket expense and saves your buyer money in the long term. Now you can go to where the peace of mind is. Builders provide a general warranty and a 10-year structural warranty at no additional cost to your buyers. And that's awesome for you as well, because that means you don't have to negotiate for a buyer warranty. It's already included. Plus, the buyer warranties a lot of times don't even include the HVAC or all of the systems in the home. Now, more equity on a good investment is what you also get. And who doesn't want, next one, please, Elise, who doesn't want a little bit more equity? Historically, new home construction really appreciates faster than used homes, especially because of the energy efficiency. That's a huge contribution to the equity. 33% of buyers surveyed said that equity is a top reason that they bought new. And I really encourage you to encourage them to be pioneers of the community, because the earlier they buy, the more appreciation can potentially be realized. Many builders, this is super fantastic. Many builders are offering the best, next one, please, best incentives, whether it's going to be towards upgrades, like we just talked about, money towards upgrades, cash to close, or rate buy downs. If you don't really understand rate buy down, I encourage you to learn the true value of what they are so that you can share that with your buyers. And this is a great time because Jess is going to tell you all about it. It's a really fantastic thing for your buyers. Okay, on this next one, you may chuckle because we're not in COVID crazy. However, this is still happening. But with new home construction, there's no more long hours writing creative contracts. The builder does it for you. And you can avoid the competitive bidding wars that are happening, and there's no stress about losing your offers. I do recommend that you use financial sheets and back them into their payments, especially because you really know what the payment and what the cost is going to be. I know that Jess would be a great partner to help you with that. And while you're not required to advise on non-commission approved contracts, you still can guide your buyer. So be familiar with what builder contracts are and talk your client through the deposits, the deadline dates, all of those little intricacies to just be valuable for them. Okay, 2 heads are better than 1. So when you buy with a builder, it's having a partner to work alongside throughout the transaction. You get to take care of your client, and the builder will take care of the rest. So whether that's contracts, again, you're not laboring over CTM. Most of the paperwork, scheduling the walkthroughs, the updates, the closings are really all managed by the builder, not you. So that frees you up to be able to help your clients on all the other things and spend time doing more lead gen so you get more clients. Now, I do recommend once you are under contract, do not take your hands off the wheel. You still need to be your client's advisor. Educate them on the process, set the timeline expectations, and really stay in consistent contact and be a part of the weekly calls for the builder updates, attend the walkthroughs, document and review, confirm selections, and keep an eye on the key dates in the contract that I just mentioned and remind your buyers about it. Set the communication expectations with the builder as well. You want to know the frequency, method, if you're going to be included. You just want to be on the same page. And then stay in touch after closing. Really, this is the time. Share the notes with the homeowners on your checklist during your walkthrough, and then remind them. You want to be part of that client's life for the lifetime and not just for one transaction. I mean, most of them. Some you might want to fire, but usually you want to continue to work with them. Okay, now last, this is the bonus. You can feel confident that you will get paid. Woo! Builders love brokers. Did you know that in the Denver metro area, brokers make up to 90% of the transactions for new builds, builders really do want your business if you are bringing a buyer to them. And they reward in different ways, whether it's perks, points, travel, hire, co-ops for each additional transaction. Have a conversation. Here's my tips for you. Have a conversation. We are in a very different world right now with buyer agreements. We all know this. So have conversations with your buyers in the beginning about new construction. Know the builder guidelines. Do you need to be there on the first meeting? If so, do. If you can't, then call the sales associate to register your buyer and let them know that you have a buyer agreement and that your buyer is going to be coming in. Now, we know buyers go rogue. So if that happens, then immediately call and contact the sales associate after they've dropped in to let them know that you are their buyer agent. Just like in a resale transaction, you can't possibly expect to not show up until after you go under contract and be a part of the transaction. It's the same. Okay, so now I have shared some compelling reasons on why new home construction is a smarter move for your buyers. This is the way you can get in touch with me. If you have any questions, I guess I'll ask just now. Elise, any questions?
Yes, there's one question. So as it pertains to new builds, what's the estimated time for homes to be finished? And what are you anticipating in terms of timing with tariffs and immigration policies? Is that going to change?
Yeah, great question. So currently, it's anywhere from 7 months to 12 months. There are a lot of builders, though, who have inventory homes available because they understand buyers need to lock rates and they want to get in and they want move-in ready. So there are a fair amount. But if they decide to go from dirt, it really depends on the builder. But you could anticipate 7 to 12 months. With the tariffs, I don't know. Yes, I don't think it's going to cause delays. I don't see us having the issues like we did with supply and COVID. It just is going to wind up impacting the costs like everything. Any other questions?
Nope.
Fantastic. Well, I am done. Please contact me if you have questions later or you want to connect. I appreciate that. And I'll just pass it off to Jess.
Thanks so much, Nina. Good morning, everyone. I'm Jess Uphoff. I run the concierge team at Homeowners Financial Group. I have been lending in the Denver metro area for 22 years, which I'm aging myself a little bit. I am not a professional webinar presenter, nor am I a professional poll taker. So I apologize for my getting a little flustered, Nina, and ruining your polls. I apologize for that. What I am good at is I'm good at lending. I have a robust background in new construction. I have serviced or helped 5 home builders in the Denver market. I've worked for a builder directly, for an in-house lender. So I have a robust experience to kind of help my real estate partners understand what happens on the lending side in building. So if your clients are open to new construction or you're looking for ways to solve problems for your clients, because ultimately that's what we do, right? We meet with people, we understand their needs, and we say, hey, we want to help you. We need to solve their problems. And what is the number one problem that we have had as an industry over the last 3 years? It's buyer affordability. So I'm going to talk today about how do we help buyers get more comfortable with their mortgage payments? How do we introduce them to new construction as a alternative to resale? Buyers right now are playing on the computer with mortgage calculators as we speak, and they are self-diagnosing that they cannot afford to buy a home. So people that you are talking to are saying, hey, I've been looking online. I talk to so many people, they think their price point is X. I got to buy a house for $450 because they're using the mortgage calculator. So today, my goal is to bring you just some data points that you can go back to your prospects with and really ultimately help them understand this is actually what's going on. I think we need to get the word out on what's possible right now in the market. I think that's one of the areas that there's so much opportunity for agents, is that we just aren't getting the word out enough. And new construction is such a wonderful way that you can help your buyers solve those problems. So I have my own little PowerPoint here that I'm going to share. So let me bring up that.
Yeah, Jess can do it herself. I needed help.
Well, I don't know. I think after my polls, I don't know. Let's hope I can do it myself. So we're really going to focus on considerations of new construction versus resale. And I'm going to just kind of go through a handful of these really quick. So pricing and negotiation. On a resale home, as you guys know, you've got your variables, price, terms, commissions, that brokers are going back and forth with the listing agent to negotiate their buyer's deal. In new construction, it works a little differently. And one piece of advice I would give brokers that are watching this is the sales agent is not the listing agent. I know it feels that way, but they're really on your team. Like, one of the feedback I've got from a lot of the new home sales reps is that brokers show up very adversarial, very like, I gotta beat down this builder. And I really believe that you're going to get more for your client if you show up being on the same team with the sales rep. I can promise you, they want to help you too. A, they want the sale because they're compensated from the sale. But B, I think that if you can get them on your side in the nicest way, we get more flies with honey than vinegar. I think that that's the way to get the best deal for your client. I can promise you that. On the new build side, pricing is usually fixed. But builders offer incentives, and builders have been negotiating price pretty substantially over the last few years. I do think as interest rates come down, that's going to go away or come down substantially, much like in the resale market. But over the last few years, builders have been doing price reductions somewhat, and they are negotiating on price. Interest rates. Let's talk about interest rates. We're not going to go into great depth on this slide, but we do have extended rate locks for new construction. So when Neneh was talking about dirt start homes, there are opportunities to lock an interest rate for dirt start. There is a lot of uncertainty with interest rates. It's very hard to tell which direction we're going. So that those extended rate locks are a wonderful opportunity to make your buyer feel more comfortable on a dirt start home. On resale, we've got, generally it's a 30 to 60 day lock is what's kind of standard. Appraisals. I will say, if you read the fine print on a builder contract, you want to be aware of the builder's stance on appraisal, because Neneh was talking about earlier over improving the house. So if your buyer comes in and they over improve that home, I don't know that they're going to work with you to say, hey, it didn't appraise, especially if you're earlier on in the whole community. You're one of the first houses, there's not a lot of comps, and then you just dump a ton of upgrades into that house. So definitely read the contract. It is so important. I watch a lot of brokers treat new construction like, oh, this is, like Neneh was saying, like, I don't necessarily need to be involved. That's so not true. You want to make sure you protect your buyer. And the builder has their own contract with lots of wording, very small fine print. Understand how the appraisal situation works with each builder. I will say, resale comps are established, lowering appraisal risk. We do have the opportunity, for those of you that know me, and if you don't know me, I'd love to talk to you about this. We have the opportunity to offer in lending appraisal gap guarantee. So we can basically, the clients don't have to pay the difference if the house doesn't appraise, and we can do that on new construction or resale. Upfront costs. Builders may need larger deposits, like the earnest money requirement could be larger than it is in the resale. Earnest money in the resale world, as long as you guys know, hit all the contingencies in the contract, you have several different opportunities to get your earnest money refunded. Builders aren't quite as forgiving. They generally need a larger deposit, and it is not necessarily refundable. They give you a short window where the earnest money is refundable, and then it's kind of like on you. If your client changes their mind, their contingency doesn't work out, I would say you should prepare your client that getting your earnest money back is not as common. Closing costs and incentives. Builders often pay closing costs or rate buy downs to attract buyers. Over the last 3 years, they're doing both. There's never been a better time than 2022 to 2025 to buy a new construction home because builders have inventory. They have homes to sell and they can't not sell them. So they're basically giving buyers extraordinarily good deals in closing costs and rate buy down. We're going to talk about those in more depth. In the resale world, closing costs, as you guys know, must be negotiated with the seller. Another thing on that is in both resale and new construction, you can finance closing costs in today's market. We never had the ability to do that, prior to 2022. For those of you that are as old as me and have been in the market as long as we have, we had, a very long run. We're getting closing cost concessions. We're like, what is that? It was not a thing in our market. The last 3 years, we've been able to get closing cost concessions and we can roll them into the price of the home. Builders allow you to do that. Listing agents and sellers allow you to do that, provided we do some appraisal protection. So that's an amazing thing for our cash sensitive buyers. And, they don't really think about it that way. So we have to educate them that it's okay if you only have 20 grand, here's how we'll do it. And it's the difference of them buying a home or not. And again, builders and resale, that is a possibility. Timing. Right now, I think Neneh mentioned this too. Builders, the majority of what builders are doing and comfortable with because of the times we're in is spec homes, which is basically homes that are going to be ready in the next 120 days is the majority of the new build inventory that builders are carrying right now. They are doing some dirt start, but it's less. And they're being pretty strategic with their dirt start because of all the changes that are going on, potential changes with interest rates, potential changes with the cost of building. So time, I would say for those that we talked about this briefly, the majority of new construction homes should be available within the next 120 days. Neneh, would you agree with that? That's the majority of what's happening out there in the market?
Yeah, great answer.
Okay. And then resale, 30 to 45 days is what's most common. Property conditions and maintenance costs. Brand new home means no immediate repairs. Warranties cover major issues, which is wonderful. I would still do an inspection on a new construction home every single time is my advice from what I've observed in my seat. And resale may require immediate repairs or upgrades after closing. All right. I was about to tell you next slide, Elise. I forgot I was on my own. Navigating new home sales versus resale. So critical questions when you're sitting down for a buyer consult for the first time. You want to understand their pre-approval and understand how long it's valid for. I would call your your prospect's lender and talk about long-term rate locks. Like extended rate locks is a really, really important thing to understand if their lender carries that or offers that. Not every lender does, or not every lender is proficient with new construction. I can't emphasize that enough. New construction is a whole different beast in terms of what needs to happen with a new construction loan. I don't think every lender can perform at the best level on new construction because there's just some nuances to it. So I think understanding, is their lender proficient in new construction? And do they offer extended rate locks? Understanding how appraisals differ for new construction versus resale and what options exist if appraisal comes in low. So if you're writing an offer on a new construction home, again, you need to read the fine print in the contract, but also understand that you need to set expectations with the client, because the builder's rep is not doing that and the client doesn't understand. So between you and the lender, it's your responsibility to explain the appraisal situation and if the appraisal comes in low. Because generally we get appraisals pretty late in the game on new construction. And so if you're kind of scrambling to get your appraisal and it's coming in low, it's something that you want to have already kind of set the expectations with the buyer. Prepare the buyers for the possibility of construction delays. This one is so important because a builder never wants to make promises on a date. And brokers and consumers want a date. And there is a disconnect there because the builder, like, was there a lot of snowstorms when they were building this year? And you know, what's going on with Excel Energy and the county and all the things that can delay construction that are outside of that builder's control. So the best thing to do is to not ride the builder to close faster, because you're just going to create an adversarial relationship that is going to hurt your buyer ultimately. So what I would suggest is just setting expectations with your buyer that delays happen. They just do. It's just part of doing new construction. So understanding, like, what is the situation with your current living? Do we need to talk about interim housing and the what ifs? Those are discussions you should have upfront with your buyer. Contingency plans are going to be really important, with also having a home to sell, having a good plan about their home sale with delays. You know what I mean? I think a lot of people, if you can qualify non-contingent for the new build, generally you're going to list the home, I don't know, maybe 60 to 90 days out. What happens if the new construction gets delayed? What are our plans there? You need to be aware of what loan types the builder is going to accept. Not every builder accepts down payment assistance, as an example. Most builders do the standard conventional FHA VA for the most part, but they offer incentives that are specific to loan types. So just kind of getting acclimated with the builder's different situation with the loan types is really important. This is a huge one. Help buyers compare whether a builder's lender incentives actually offer the best overall financing package. I think what I observe in a lot of the brokers and consumers that I run up against is that it's easy to say, oh, they're offering this incentive. I have this story. I did this loan, I don't know, 5 years back or so, where it was a Richmond home. And they were like, we're offering $25,000 as an incentive. And I always say to my partners, my real estate partners that have their consumers out in the, looking for homes, I don't care whether or not I do a loan for your client. I care about you and your time and making sure that your client has what they need and you have what you need. So I never, ever want my agent partner to feel like they can't send me the in-house lender's stuff and say, hey, look at this. And can you help me decipher, is this rate good? Is this incentive good? So this one I was doing 5 years ago with Richmond, the rate was like 2% over what the market rate was at the time. I don't know if it's changed for that builder since, but it was crazy, 2% over. So I showed the client, like, here's what we do. And it didn't make sense to take this $25,000 incentive. I had another one that I just locked this past week that is a VA loan where they were giving $20,000. They were charging $13,000 up front. And they were, the rate was so much higher, like so much higher than the market rate. So that particular one, that client decided to work with me instead of the in-house lender. So don't just hear big numbers, 15,000, 20,000, and just assume that people can't compete. But I think what I would recommend is have your client get pre-approved with the preferred lender always. Have them get an estimate from the preferred lender always, and then share that with your lender partner. And if your lender partner is not proficient in new construction, share it with me. I would love to help you if you need help in deciphering, is that the best situation for my client? Okay, let's talk about buy downs really quick, because this is all the rage in the new construction world and in the resale world for that matter. But the buy down opportunities in new construction far outweigh what can happen in the resale market. So if you have cost sensitive or payment sensitive clients, new construction might be the best option for them. And the way you know that is when you're meeting with a new client, do not be afraid to say 2 questions. How much cash do you have to buy this house? And what monthly payment will you be able to sleep well at night and still enjoy your life and not feel house poor? Those two questions are so, so important. So ask those questions. If you hear, we want a $3,000 a month payment, or we want a $3,500 a month payment, and they want a single family home in the Denver market, you should be thinking new construction, in my opinion. I mean, you can go resale and get a big buy down and do a single family home. You got to get pretty creative, but $3,000 to $3,500 for a single family home in Denver with a minimal down payment, I should say. So if our client has maybe 5% down or something like that, those clients, new construction is a great path for them. Builders offer multiple buy down types. I'm going to start with the standard buy downs, and this is the standard buy downs for both new construction and resale. Temporary buy downs, permanent buy downs. Temporary buy downs, they have lots of names. 2-1 buy down, 1-0 buy down, 3-2-1 buy down. I never call them that because I feel like it scares consumers to be like, it's a 2-1 and it's 2% lower year one, 1% year lower. People start thinking ARM, adjustable rate mortgage, and they're like, whoa, 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 I don't want that. So I basically very early on adopted some verbiage where I call it a subsidy program. So I call it a 2-year subsidy, a 1-year subsidy, a 3-year subsidy. And the reason I call it that is that actually is how it works. We negotiate a credit with the builder. Let's say it's a 2-year subsidy, AKA 2-1 buy down. Let's say it costs $12,000. That $12,000 goes into a bank account with the lender. The lender holds that in a bank account, and it subsidizes your buyer's mortgage for the first 2 years. When you call it a subsidy, the other thing you can say is, did you know that builders are paying a portion of your mortgage for the first 2 years? This is really good for people that are in an industry that they know they're going to be promoted. So like electricians, they know that like, hey, I'm going to get to this level and I'm going to get this income and I'm going to get to this level. Or people that are graduating from school, they know they're going to get a more higher paying job. There's a lot of buyers that if you say, hey, what if we were to find a situation where we could subsidize your mortgage payment for the first couple of years, and then you got your big boy or big girl mortgage payment 3 years from now, is that something that, you know, that way at least you're gaining equity for these first couple of years when it's a little bit tighter for you. So that's a good way to do it. So temporary buy downs are a very effective tool. I will say the whole industry, realtors, lenders, everybody's been saying rates are coming down, rates are coming down, rates are coming down, and consumers are fed up. They don't want to hear it anymore, to be honest. They really don't. So I am actually not doing as many subsidy programs myself, because I'm talking to a lot of clients that bought in 2022 and 2023, and rates have not come down to where we thought they would. And so I'm being very careful with offering these as like, this is your path to homeownership. I think that permanent buy downs have been my jam most recently. If you can buy an interest rate in the 5s, which is possible, guys, you can get a rate in the 5s today. Your clients need to know that. They need to know that. You can do that even in the resale market, but a permanent buy down, the way that it works is the buyer can only buy their rate down by a certain amount. It's usually 2.5 points is what the regulators will allow someone to buy their rate down. If the seller helps, you can buy down, you know, you can buy 7 points if you want. And that's how you can get a rate in the 5s or 4s even. So the permanent buy down, you can get a pretty low rate. I like that because you can skip the first refinance. So let's say if rates are in the 6s today, so people are going to refinance into the 5s, they're going to refinance again into the 4s. So there's going to be 2 refinance opportunities for all of our buyers buying a home right now. So if you can skip one and you can go grab that rate in the 5s right now with a permanent buy down and skip an entire loan where your interest carrying costs and starting that loan over, it's a really, really great tool, and it makes clients feel way more comfortable with their payment. So I'm a big fan of permanent buy down. Forward commitments. This is pretty cool. This is probably the number one thing that's been very cool over the last few years with builders. It's not cool for the builder, but it is very cool for consumers and brokers. The forward commitment, the way that it works is the builder goes and buys a really, really low rate. They 5 to 8 points. So if you guys are seeing advertising for 30-year fixed rates at 5.99 or 4.99 or 3.99 or whatever it is, that's because the builder went and bought a pool of money called a forward commitment at a rate. So, hey, we're going to buy $4 million at 3.99, which is a common thing like Lennar has been doing. A lot of builders have been doing forward commitments. Almost all of them are doing forward commitments. The difference between that and a permanent buy down is the forward commitment doesn't count towards the interested party contribution limit. So we have limits of how many credits we can get from a seller or a builder, and the forward commitment doesn't come with any points to the buyer, nor does it come with like anything that would count against those interested party contributions. If you can get someone a rate in the 3s, 4s, or 5s, the affordability concerns kind of go away. Yes, they're still there for taxes and insurance and things like that, but it is so much different. So if you can calculate mortgage payments with these forward commitment rates and help your buyers understand where payments are coming in, it is so much lower. So those forward commitments are just really, really cool. They are costing the builder a tremendous amount of money. So they do not offer them on Dirt Start. They only offer them on spec homes. Generally, they offer them on aged spec homes. So only on houses that basically are completely finished or will be in the next, 30 days that they have not sold yet. So if you meet with clients and they're ready to go, let's say they're moving in from out of town, or they're like, we've got to find our house, our lease is expiring, get it going, and finding them a forward commitment with a builder would be a tremendous way to help them. We already talked a little bit about closing cost contributions. We do have max allowances. Our team, if you're interested, you can email Elise at ch-loans. She can send you, we have a chart of closing cost max allowances for interested party contributions, something to just kind of be aware of. It's a important thing to know. Rate locks. So those long-term rate locks, a very popular question I get is what happens if we lock someone today? Rates are in the, mid to high 6s, and then rates go down before they buy their house. So when you do an extended rate lock, you get one float down. So your buyer does get the opportunity to float down to a lower rate once within their whole build cycle. So that lender and you and the client should work together to make sure when should that happen. I will say I have been very bearish on rates coming down recently ever since our new office came in. However, I will say recently, just within the last couple of weeks, there's been a lot of economic data that might suggest rates could theoretically be coming down. I'm not holding my breath, but that float down is so important because it gives them the security of like the rate will never be higher, but it also gives them the opportunity to grab that lower rate. Builder lender versus outside lender. Builders want you to work with their preferred lender for 2 reasons. One, the preferred lender theoretically is more reliable for them, where they can kind of control the process. A lot of the builders own a lender. So for example, Dream Finders Homes that Nina was talking about, they own Jet Home Loans. They own that lender, okay? They share revenue between the builder and the lender. So they push very hard to use that in-house lender because they want to earn revenue, not only on the house, but also on the loan. So it is something to be aware of. They will tie incentives, pricing, upgrades, everything under the moon towards the in-house lender. And that's why a lot of times they want to just be able to control the process and be able to generate or have additional revenue. David Weekly Homes that Neneh was talking about, they don't own a lender. So they work with lender partners that they trust, that are well vetted, that have these forward commitment opportunities, these interest rate buy downs. They have proficient loan officers. They are, they want you to work with their lender, not because they share in revenue, but because they really want the client experience. David Weekly is really, really big on reviews and just having a really, really positive home building experience. So they want this experience to be streamlined. So that's the main reason that they use the preferred lender. So there's a multitude of reasons, but those builder reps and the higher ups, they push really, really hard. If you have a lender you love, I see a couple of my partners on here. So if I'm your partner and you love me and you don't want me to lose that client I already pre-approved, ask. I would ask and just say, listen, my client doesn't, just try. My client doesn't want to get pre-approved with the in-house lender. My lender will share credit report information, desktop underwriting information, anything you need. But we are in a position that we would prefer to stick with our outside lender. If it's going to hurt your client from getting incentives, then again, allow me to do an analysis of what is a better deal for them. I want your client to get the best deal, not just the loan. But if you can get that deal and keep the client with your preferred lender, that's happening too. I know from working in that environment, they'd rather sell the house than get the loan. So if you can work with that in-house sales associate at the builder, be collaborative, but firm that you really want to use your lender and get the incentives, I think it's worth asking. Let's talk about property types really quick, because there are some nuances that we run up against. So single-family homes are easiest to finance because we aren't dealing with HOAs and things like that. Standard loan options, conventional FHA, VA, USDA, jumbo, those are kind of the most popular loan options. Townhomes are financed like single family if the land is owned by the buyer. Condo ownership that follows condo guidelines. You may have heard there is a lot of condo stuff going on, lots of regulations changing within the loan agencies because of deferred maintenance with condo buildings nationwide, that they're changing the game for every condo complex. It is complicated, it is ever changing. So that condos are a little bit more complicated to finance. This again is finding a lender that's proficient. I think that a good lender should have a good condo desk where you can ask us to do the homework for you. So if you have a resale condo or a new construction condo and you have curiosity, that the new construction sales rep should know, is this FHA approved, this condo? But it is a really important thing to know. Even townhomes can have like FHA approved. They need to be FHA approved. One of my partners is in here and he had a townhome. He and I were going back and forth over email and I was like, yeah, it's approved. It's a townhome. It's not a condo. And then come to find out, sure enough, it needed FHA approval. Condo financing, what we need to ask as a broker, is the condo currently involved in litigation? What is the owner occupancy versus investor ratio? If your client is buying it as their primary home, that question is less important, because if we're going to make the ratio better, your client is owner occupied, it's not as important. But if your client is buying it as an investment property, it's uber important. Are there any upcoming special assessments? This one's huge. Another one I would say that's not on here is there any upcoming renovations that are happening to the building, to the roof? Those are all like really important to understand, deferred maintenance or maintenance that's happening to the building. HOA financials, a budget's required if your client has less than 10% down, or if it's going to be non-owner occupied. HOA factors that impact lending, high HOA dues, knowing the HOA of the building that you're buying in. is really, really important. Sometimes they have double HOAs. Sometimes it's so early on in new construction, they don't even know how much the HOA is going to be. It is not uncommon. Don't get mad at the builder because it is not them. So sometimes you'll be buying as one of the first lots in the community, and they honestly don't know what the HOA is, but it is important to keep on that and asking. We talked about special assessments. Insurance is a huge one. Insurance costs are going up, as you guys know. You know, they're skyrocketing right now. Ask the lender to review HOA financials and insurance coverage to avoid financing issues. I just had a client go under contract on a townhome, but it was a condo last week. And we found out pretty immediately that they didn't have sufficient insurance. So it's something that's happening more and more commonly. New construction, there's some pre-sale requirements with FHA and VA conventional, in terms of like the way that the loan agencies new construction. You can't just build a condo complex and then just start selling conventional financing or other, FHA, et cetera. There's a process to getting the pre-sale process done so that the building can be allowable in those different sectors. Again, we talked about HOAs not being established yet. What you guys should know, confirm the property type early, ask the new construction salesperson, or come to your lender with an address if it's in the resale world so that we can help you identify what type of property it is. I go on to county records to look at the legal description. If the legal description says condo, in the legal description, it's a condo. Sometimes it doesn't say that and it's still considered a condo. So we need to do our homework together. Check if the condo is Fannie Freddie approved, which we can do for you, FHA or VA approved. You guys can do that yourself online. They're just websites. So if you don't want to wait on your lender to look if they're FHA or VA approved, you can just go to the website and check. I'm always happy to do that for my partners. If you send me an address, it's a very easy little check. A lot of my partners are like on the road showing property. So if I can be, leverage your time and do it for you, I'd be happy to. Verify for new builds that lender and builder approval status before going under contract. You want to make sure that they have all their ducks in a row as it relates to certain property types. All right, let's talk about how we can present.
Real quick, this is fantastic. All of this has been great information. We're at 10:07.
Okay.
I think that we can
Wrap it up.
Yeah.
Okay.
Thanks.
I talk all day. Sorry about that. We could always send out this slide because this is a good slide to have that's like overcoming buyer hesitation. So I'll have Elise send that slide out. That was our last slide anyway. So thank you for coming, everybody. Nina, it was wonderful to teach with you today. And what an opportunity, baseline with all the different builders that are in there and all the inventory coming up in the community. Super excited. I know me personally, I would be more than happy to help anyone because I am well-versed in new construction and financing. If you guys have questions or there's anything I can do to support you in your business, please let me know.